HHS stock, Harte Hanks Inc. It closed at $12.01 in the last trading session of the 29th of June 2022, a gain of 5.335% on above average, on above average volume of 242,000 shares and more. And also in the previous session, it also gained 5.6% according to nasdaq.com. So it also reached a new 52-week high. It says here price triggered a new 52-week high event of $11.6 on 9:34 a.m. Eastern US time on the 29th. So moving back to this piece written here on Nasdaq, it says this move can be attributable to notable volume with a high number of shares being traded than in a typical session. That is definitely the case with the 28th and the 29th, and this compares to the stock's 22.6% gain over the last 4 weeks. The stock is benefiting from the company's diversified revenues across segments and customers, and its growing presence in the healthcare and consumer product verticals. So given all that is going on economically, market experts and analysts are also speculating, or not speculating, they are deducing that the healthcare sector or subsector, as the case may be, they are not feeling this pinch as bad. They're not faring that bad. As a matter of fact, that sector is pretty much holding up, and I mean for obvious reasons. If things really go bad, we will still pretty much be spending money on healthcare. So this marketing company is expected to post quarterly earnings of $0.32 per share in its upcoming report, which represents a year-over-year change of 88.2%. Revenues are expected to be $49.3 million, up 0.1% from a year ago. So remember as well that I pointed out here that the company has diversified revenues across segments. So while earnings and revenue growth expectations are important in evaluating the potential strength in the stock, empirical research shows a strong correlation between trends in earnings, estimate revisions, and near-term stock price movements. For Harte Hanks, the consensus earnings per share estimate for the quarter has remained unchanged over the last 30 days, and the stock's price usually doesn't keep moving higher in the absence of any trend in earnings estimate revisions. So according to them, the advice is make sure you keep an eye on HH stock going forward to see if this recent jump can turn into more strength down the road. So the stock carries a Zacks number 2 rank of the buy. So okay, so yes, and we also have a report from CFR here. It says here, you can see the valuation. According to them, quantitative model drivers, valuation is negative, but quality is positive, growth is positive, financial health is positive, street sentiment is neutral. Yes, that's I can imagine, because it's not that popular, so street sentiment is pretty much makes sense. And also, yes, even the valuation is also makes sense. Positive momentum is positive as well. So, but at the same time, it also has high risk. Risk evaluation is very high. Asset / market size risk is high. Financial leverage risk is moderate. Price volatility risk is high. Liquidity risk is also high. And okay, the business summary is that Harte Hanks operates as a customer experience company in the United States and internationally. It operates through three segments: marketing services, customer care, and fulfillment and logistics services. The company provides strategic guidance to help clients to plan and execute omni-channel marketing. Okay, so that's this report from CFR. Okay, moving back to the stock. Yes, as you can imagine, yes, the underlying trend is a bullish one. This is the 1-year chart. This is a bullish one, and it has been like this since the last 2 years, since 2000. That's when this strong trend has been in place. It has reversed its decline over the last 5 years, has reversed all of that now, and I think this price we're looking at right now is a 5-year high, as a matter of fact. So we can also see has a relatively small float. Shares outstanding is 7.02 million shares. So you can imagine that the float is, I mean, the outstanding shares is a small float relatively, let alone the float. So, but we don't have a figure of the float. If that's the float, 7.02, that's also very quite relatively small, you know. So moving down, everything is strongly bullish. Everything is strongly bullish, you know. So the readout here says obviously that it appears to be in a strong bullish trend. Its 200-day moving average is upward sloping, and the MACD histogram is above zero, and it's easily outperforming the S&P 500. Volatility for the last 10 trading sessions is 56.08%. So the momentum, obviously, as you can also imagine, is strongly bullish. The 14-period slow stochastic oscillator is above 80 on the daily chart, the level which many analysts call overbought. This means that investors have been actively purchasing shares and driving the price higher. The volume for the last trading session, the session of the 29th of June, was heavier than usual, trading 242,340 shares versus an average of 20,255 shares per day during the last 12 months. The unbalanced volume indicator is bullish. The slope of the indicator is positive and suggests that buyers are presently more active than sellers. And the Bollinger Bands, it's saying that the volume are presently wider than usual as a result of greater than normal volatility that accompanied recent price moves. Events such as this may precede a pause reversal in the near-term trend, and yes, that is quite likely to happen. It does reverse. You can see that when it reached this, I would want to believe this may have been a 52-week high of $10.82 as of the 10th of June. It reversed and got a support from its 10-day moving average. As a matter of fact, it has not closed below its 10-day moving average since it did so on the as of mid-May of last year, of this year, mid-May of this year. So is that the case? Yes, that's the case. It hasn't closed below that 10-day moving average since over a month now, more than a month, and counting a month and 2 weeks and counting. That is calendar months, you know. So it's strongly bullish. So it's definitely, it does retrace as the Bollinger Bands are expressing. It does retrace, and when it did retrace, it got a support at its 10-day moving average and tracked along that, or rather, it may have slightly closed below that once. May have slightly closed below that. That was on the 16th. Okay, exactly about 1 month thereafter, you know. So, and kept on bouncing. Oh, actually, yes, maybe twice as well, but not significantly, you know. So this is a strongly bullish stock, and you know, I think there's every grounds to believe that it will continue to extend, but in the short term, expect that it's going to retrace as well. The probability that it's going to retrace, the probability that it's going to close below at some point below this $12.03, which is the last trading price, is over 97%. You know, so I mean, because the stock is rallying, there's no support no support around it as such. So naturally, you'd expect that it's going to cool off. You know, it's a natural thing. So the likelihood that it's going to cool off slightly is very, very high. But that does not mean that will be the case. You know, so so moving on, we have plotted a few supports here. We have the next support, which is quite far away. It's at 9.63, and that's the Fibonacci support. Or rather the retracements, but outside that, these moving averages, the 10 and the 20-day, are also supports, and indeed all the other supports he has also printed before. So, and then the other Fibonacci support is, or retracement level, is at 8.89. The previous one is 9.63. The one after that is at 6.15. Then the last one, not the last one, the penultimate one is at 7.24. The last one is 5.75, which is its 52-week low. Okay, so given all of these things and all that's been doing, we think in the short time it has a potential to get to $14.7 or $14.71. So see what you make of HHS stock, Harte Hanks Inc. Strongly bullish value stock, not a growth stock. Short interest is very, very much not existent, 0.29%. So there isn't any skepticism at all. That's also what some market participants, analysts might want to see. They want to see skepticism towards this company, because that skepticism will add money to the stock, lock up money into the stock. But in the absence of that, it does not mean that it's not a good stock. But if we were there, that would have been wonderful. This is a company that has that diversified, that has a diversified revenue base, and it has also been around for a very long time, since 1920s. So there isn't any skepticism towards the stock. Well, quite good, but at the same time, it would have been better if it were there. Probably meaning that there isn't enough criticism towards the stock as such. So, well, it's ticking all the boxes, and that's how it is for the stock. So, see what you make of Harte Hanks. I'm not recommending that you buy it, but everything points to a further extension. Okay, so thank you very much for watching this video.